Greetings, everyone. I'm excited to welcome Tom Aley, co-CEO and co-founder at AI Identified. Tom, welcome to the show.
Thank you very much.
Great to have you here. Let's dive right in. Tell us a little bit about your background.
Yeah. So let's see, I've been at this since, the late 90s, sort of in and out of different types of careers. Came out of graduate school and after working in high tech sales for a while in the Boston area. And I really wanted to know every aspect of startups and high tech. So I decided to take a job as launching a venture fund for a big media venture practice, Reed Elsevier Ventures. They're known for owning things like LexisNexis. So I got to spend some time understanding, I guess, every facet of a business from somebody who was writing a check and making investments in sort of early stage Series A, Series B businesses that would, help from a strategic perspective with our global footprint. And, this was sort of 2000. So the economy had just come out of was in the middle of a tough rut. And so as that began to clear up, I really, really wanted to become an operator. And so at the time, I have a twin brother. At the time, he was running corporate development for Amazon. And I called him up and I said, "Hey, I've got a crazy idea. I want to start a company and it's in and around the space I've been investing in. It's, next generation search technologies. And Amazon's not going anywhere." So somehow convinced him to come to Boston and start a company called Generate. And Generate was really focused in financial services. And at the time, we basically competed with at the Hoover's, or Zoom Information was just getting started, as was LinkedIn. So if you kind of took those two businesses and jammed them together, we would track, I guess at the time we were crawling about 150,000 news stories looking for money in motion triggers. Did you raise money? Did you sell your company? Did you hire new people as active in market leads? And then we allowed people to look up people profiles and company profiles and then see how they connected through degrees of separation based on work history, where LinkedIn was doing it on a permission-based network. And so we got that business, did pretty well with it, ran it for 4 years. In 2008, ended up selling it to Dow Jones, who was using it for their financial services push. And then as we were there, we helped get a company off the ground called NetProspex. And that was sort of, I don't know if you remember Jigsaw back in the day, but it was a next generation Jigsaw where it was crowdsourced data. So if you put a business card in, you got to take one out. Pretty soon people were uploading massive databases. And it was really a lot about hygiene and enrichment and sourcing new contacts. And the company was sold to Dun & Bradstreet about 6.5 years ago. And at the time, Dow Jones came back to us and said, "Hey, what could you do with artificial intelligence and machine learning that you couldn't do before?" And my brother's background being in Amazon was all about the consumer information and household information, which is, about $100 billion market dominated by folks like LiveRamp, Equifax, Experian. And then my background was B2B. So Dun & Bradstreet, LexisNexis. At the time, LinkedIn would become very big in Microsoft. But those two worlds had never been merged together. And so we saw an opportunity to truly have a 360-degree view of a person, sort of their sort of home life and their business life and the insights that you could gain from that. And so we launched the company, we launched AI Identified then with the concept that with this merged database and insights and that notion of tracking real-time trigger events that could effectively are high-end leads. And then using AI and data lake architecture, build probably one of the most comprehensive relationship mapping technologies in the market. So we got about 1 trillion relationships that come out of the box, and then you can further customize it with your clients, your boards of directors, your teams. And so, so that's, so we're identified as a, financial services company really focused in private wealth, investment banking, asset management. And so that's at a high level. That's, some context.
Yeah, no, quite the journey. And it sounds like, you were very early on in that data enrichment play. I mean, I still remember my first LinkedIn invite, like, what the heck is this LinkedIn platform? And just ignored it for a while. So
It was powerful. In fact, the week that Reid Hoffman was going public with LinkedIn, my brother and I somehow got a meeting with him. And this was a long time ago, but he said, "I don't know why I'm meeting with you guys, but it looks like you got something clever here. So let's talk about it." And, and then, they just took off.
Yeah, amazing. So let's talk about your current endeavor, AI Identified. So tell us, what products and services does AI Identified offer?
Yeah, we really offer two different opportunities with our platform. One is a SaaS application that if you took If you took Zoom information and merged it with LinkedIn and then merged it with LiveRamp and then put some wealth engine around it, you basically have this end-to-end platform that is next generation that maps not only new opportunities in the top of your pipeline, but it gives you next best action. So, okay, now that this lead has come in, I need to do more research on the people and the company. And then it would be great to see how myself, my organization, all the way down to my neighborhood connects to that opportunity so I can surround it with a way to determine, the next best way to get in touch with them. So we've been building this for about 5.5 years and got well over 2,000 clients now in financial services. And so that's the application side of the business. And then we have a DaaS side where people can license. So a lot of our clients like to take their data into their CRM systems and just manipulate it however they'd like. So there are really two different versions of that. And we've probably got all of this data is based on public record. So, and a bunch of modeling that we do with our algorithms. So yeah, that's the offering in the market.
Okay, so focused on leads and the top of the funnel for financial services. And before you mentioned what private wealth or financial advisors, is that your ICP?
Right now, that's the target. Yeah. And we're growing into the investment sell side, venture capital and private equity. So going after existing players there, with our most recent funding, which I'm sure we'll get to in a moment, we'll be able to have the resources to build out those opportunity areas, especially with the partner who came in.
Okay, and with these financial services, your customers, I mean, could this be that one person solo financial advisor shop up to the mega
Yeah.
banks?
Yeah, we've got clients who just have a single shingle on their door, and all the way up to some of the largest wirehouses in the country. So
Okay,
yeah, a really big diversity, and it the more information you provide to us, and we don't actually take the information and we just match to it. So for example, if you wanted to upload your CRM to our database, or if you wanted to put in, your favorite clients, or you wanted to upload your LinkedIn or your contacts in your mobile system, those all go to your own private file. We never touch it, but we match to those. And then that opens up more and more opportunity for you to go out. So I'll give you an example, in my network, I've got roughly 3,000 people that I'm one degree from. With my team and the things that I've uploaded, that expands quickly to 550,000 first and second degree connections. So and my team identifies about 40 people. So that's a pretty big step up in terms of, the opportunity to see how you're connected to the United States right now.
okay, so yeah, kind of two plays here. You mentioned the SaaS application plus the data side,
Mhm.
and then on the SaaS app side, is this say a per lead pricing? Is this a flat price per month to get so many leads? Tell us a little bit about the pricing.
Yeah. So for now, it's a subscription per seat per year. Our list price is $6,000, competitive with the market. With volumes, that goes down. So yeah, and then the DaaS is competitively, sold into like people that would like to digest it that way.
Okay, okay, perfect. And so you said it's founded about 5.5 years
Yeah.
ago.
Mhm.
Okay, and then do you guys have a headquarters location or virtual?
Right now, it's a virtual company that's based in Boston. So there's a concentration in Boston, but we're also in Charlotte and San Francisco.
Yeah, that's a common response is like, yeah, kind of have a concentration, but not officially the headquarters.
Yeah,
So
I
yeah,
mean,
very
with the pandemic, we really had to try to find the best people wherever we could find them, and we may be, as I said, with our new resource, we may be looking for some office space in the Boston area. So
okay. Yeah, great. In current team size?
we're about 40.
Okay,
Yeah.
40. And then anything you want to share around ARR ranges, revenue ranges, or general scale?
Because it's private, I'm not
Yep.
allowed to do that, but it's, you can probably put the math together with the number of clients and the pricing. So I will say that, we've been lucky in that we've been able to double every year
Hmm.
since we've been revenue. So about
Hmm.
3.5 years, and expect the same this year.
Okay. Okay. That's great. So about doubling growth. And then it sounds like, so 5.5 years in, but then revenue generating for the last three-ish
Three
years.
and a half. Yeah.
Okay. And then tell us, it'll be interesting, like a little, you're helping financial services with their top funnel, their pipeline lead. So tell us a little bit about your go-to-market motion of finding your prospects in these financial service companies.
Yeah. Well, given this the third version selling the same industry in our past, we've made a lot of friends in the industry over time. and they're actually the ones who call us and said, "Hey, what are we doing next?" But for the most part, it's, it's picking up the phone and calling. We've got a telesales organization of about 10 folks. We've got a business development and sort of mid-market sales team of about 5 or 6. And again, we're going to be adding to that. So it's, the go-to-market is really about picking up the phone. We'll get more and more clever with marketing, but for now, it's really, this kind of, just reaching out and going to see people, and that's picking up more and more, more
Mhm.
so on location. I think a lot of people are, usually when you're doing these larger financial services organizations, they've got people from 15 different locations when you're on a Zoom call. So, but yeah, and we're thinking about doing some interesting new distribution deals with bigger partners and really leveraging the channel. And to that point, FactSet, our new strategic partner, has a pretty big sales force and a lot of clients that we're hoping to sort of build an opportunity to get into more of those organizations that we're in right now.
And I talked to a lot of founders who sell into a lot of different industries. And do you find financial services, are they tech adopters? Are they laggards? And in financial services, is there just more, say, internal controls regulation that you have to kind of hurdle over to get your product in there?
Yeah. Yeah. So we built from the ground up with, I think our first hire was our chief corporate counsel, who was the former chief corporate counsel and chief privacy officer at Dun& Bradstreet. We'd worked a lot together over the years. But yes, I would say that technology, absolutely great innovators. And, they get slowed down a little bit with those ups and downs in the economy because they have to control their staff and have to make changes and evolve, and budgets go down. But, I'd say the last several years, as we've come out of the pandemic, people are really, forward investing into technologies and to really lift their organizations to compete better, to have more visibility and more insight. And that's really what our tools enable.
Okay. Okay. Yeah. Really interesting. And yeah, let's switch to the fundraising side. So, how
Oh,
much capital have you raised to date now?
probably to date about $30 million over those 3.5 years. We did a Series A, gosh, back in November 2020 of 10 million. And then we did a bunch of convertible notes because it was hard to price around during the pandemic. And then all those convertibles came in with a Series B that FactSet led with 12.5 million. They led with 12.5 million, but there was another probably 8 convertible notes that converted as well.
Okay. All right. So about 30 million raised in total and just had that Series B. So tell us, with that Series B, like we know, and I talked to a lot of founders at that Series A where it's like they see signals, they're getting traction now, where let's try to now invest more and scale up a bit. But what was that trigger then going from the Series A to Series B? What did you see there, or the signals that said we're ready for that next raise?
Well, because we were really on a good march in terms of growth, sales growth, that was doubling every year. We, those first couple of years of the pandemic were super hard because we were still in development, but still trying to find early trial customers. And so there's sort of been a constant need to finish the technology and then get to market. And so we've been very, very focused on, in the sort of financial services space. But, it's the trigger is really, we really needed that next step, but we had to balance that off against valuations and dilution. So, it's a tricky dance. Had we raised money, last summer and done our Series B then, my guess is, the valuation would have been half of what we got. And I can't really talk about valuations, but
Mhm.
let's just say that, it's multiples of, no, I didn't tell you what we were doing in revenue, but it was, we got a very fair multiple, and given the strategic opportunity, I think that was priced into that as well. So I think FactSet believes that we can help them innovate, add some sort of, a unique value
Mhm.
position that they don't have. And of course the volume of their clients, I think they have over 80,000, they certainly see that we can be used in not just the core private wealth area, but in other parts of their business.
Okay. Yeah, appreciate that insight. And with that Series B and that capital, so where are you thinking about deploying that internally? I know you mentioned maybe scaling up go to market, but any priorities with that capital deployment initially?
Yeah. In our world, accuracy is everything, and, and timing is everything. So we're really digging in on not only shoring up our IP, but really getting significantly better at everything from quality control, quality assurance, trying to get the best data we can. And when you're dealing with, we have profiles in over 220 million households merged together with about 100 million of working America, times an average of about 150 pieces of information. Again, all sourced from public records, SEC, town halls, et cetera. That's a big database. And so it's, as with everybody in the industry, you always grapple with, let's make sure we get the best information, the highest accuracy to the people, who need it.
Okay.
And
Yeah.
so sorry. So that's on the technology and product development front, but then we've got a really open market. I mean, if you just look at the over 400,000 financial planners, RIAs in the market, and, we've got 2,000 of them. So there's a lot of opportunity just in that basket. So we're going to be hiring in the sales and marketing area as well.
Okay. All right. So yeah, the data side, quality control, go to market function. And then for those, founders who are considering that next raise, thinking about, say they've done the seed series A, now thinking about that next raise, maybe, series B, any lessons learned in your fundraising process that you'd like to pass on to the founder community?
It's, if you're going to go with an institutional venture capitalist, and this may go without being said, but I've had to learn it a couple of different hard ways. Make sure that the partner that's going to be working with you or providing, guidance for you to get it through the process is from your industry. I've always felt that somebody who's actually been in operations and had to wake up at 3:00 in the morning wondering how they were going to make payroll and actually have done it, rather than those who may not have been involved. I mean, there's some incredible VCs who have never, had an operating position, but it's been my experience, especially I've been on over 15 boards, that the people who've actually been there and had to, to make their numbers, they're typically very good. And I'm a big fan, perhaps because I was in that seat, of strategic investors, because VCs will always promise that their networks are huge, and they are. Some of them are just outstanding. There's nothing like, having somebody like a FactSet who's kind of got your back in the market and can really help with sharing you to their, thousands of clients and their hundreds of salespeople. And, and there's more than just a financial return for them. There's a strategic return. So they really, or should be very, very helpful to help with the execution of the business. And again, I'm not trying to knock on VCs. This wouldn't be very far in this country if we didn't have them, but I've always had good luck with them. And we've, having said that, we do have an institutional VC who's fantastic. And he's probably one of the better board members we've had in my career. So so just think carefully about it. It's, when you're early in this, and you haven't raised money before, that notion of spray and pray, you feel like you have to shoot out 40 to see who's going to return. Really research the industry and understand, who's on the boards of complementary, industries or companies. And it makes a difference. And I think the antithesis of that is true. Be wary of people who haven't invested in your industry, because while they might be writing a big check, you'll be spending a lot of time educating when you should be out selling. And, you can just, a lot of the boards I was on when I was a VC, we had a lot of people who like to talk at the board meetings, but, we weren't necessarily as strategic as we could have been. So anyway, just some high level thoughts.
Oh, no, I appreciate that. That is very important. It comes out, but like founder investor fit, that they know your industry. You don't have to explain that and educate them, what the industry does. And then you said, and additionally, it's like, hey, it helps if they were an operator, maybe have a better connection there.
Now, there are reasons not to go strategic as well, which the institutional VCs are fast to tell you. And, it's getting kind of boxed out through right of first refusals, and there are ways to negotiate that. So you just have to make sure you either understand that or have a very good lawyer who can guide you.
Yeah. So appreciate that insight. And before we wrap up with a couple more questions, just thinking about your product, and it sounds, data intensive, maybe, I don't know, maybe compute intensive, and just thinking about your cost structure and COGS and DevOps and hosting costs. Is this something that, because that sometimes is a black hole. It's like, why is my Amazon bill, 50,000, 20,000, not sure. Is this a product, it sounds like, that needs more, compute power than say like a CRM application?
So I think they're probably very similar depending on how many analytics and matching algorithms you're using. So yeah, AWS is clearly our largest item in our cost of sales. And the companies that are in that space, Google and AWS, they're fantastic, and they hook you for first couple of years, you get it for free, and then you have to start paying. And if the way we operate, we actually rebuild our database every single day. And so that takes a huge amount of compute, given the amount of data that we have. And then what we're trying to do, because there are tons of different meaning applications to oversimplify it within what we do with the data and the machine learning aspects. So yeah, it definitely is something to look out for if you're launching in the B2B, data and analytics world. Our CTO's, Dan Kochi, has just been a phenomenal architect, and he does a lot with you. I mean, he does a ton. Every time when we started this business 5.5 years ago, and we were going around to some of the larger banks, and almost all of them, and they still are, say we're working on similar functionality. And, then, we continue to call them back, and it's hard to do, especially with an internal team, because they've got all their other priorities. So we were able to perfect a service and do it pretty efficiently in terms of use of capital. So yeah, I'd say that, understanding that impact on cost of sales, and because we license a lot of data, that's also, if you look at this business as an investor, at first blush, if you just call us a data company, you're like, well, your gross margins are too high. I'm like, well, actually the gross margins are fixed from a data perspective, because as we grow in revenue, those don't change, because those were fixed contracts. AWS is a different story, as you know, that does go up, but it is what it is.
Yeah, no, appreciate that insight, because maybe some applications where it's like, you've got to carve out a lot of initial budget just because you're going to be using a lot of, say, AWS resources. So yeah, appreciate that. So Tom, at this stage, 5.5 years in, do you have a favorite number or metric that you're using to guide the business?
Revenue is always top line for me. I
Yeah.
just, if you don't have your eye on that, then, once you start to sort of plateau off, you become less interesting in this world. So we're always trying to double or triple, if we can, that top line sales number. If, the revenue takes care of a lot of issues, and it's also, it's an indication of whether or not you're hitting your mark or you're suffering, understanding, what your churn is and why that's happening, and dedicating analytics to that. So yeah, I'd say, as somebody who grew up as a salesperson, always focused on making quota, that just changed to now we got to make the whole quota. So now, and of course, if we don't have our technology and accuracy levels and data and all of the privacy and rights just completely nailed down, then we're going to be in trouble. So there are a lot of KPIs that we monitor for that, and there are lots of great tools out there for that to help us as well.
Yeah. So ARR revenue, always a favorite founder metric. Then it
Yeah.
sounds like, internally, just those data checks, quality control. So appreciate that. So Tom, as we wrap up here today, appreciate your experience and sharing your journey. What's coming up next for Identified?
Well, we're just coming off the heels of this financing. So I think you'll see us a lot more out in media. We've been very quiet up until now. And I think we're going to be able to start screaming from the rooftops. And I think, we're getting more and more recognition in the industry, whether it's Inc. 5000 or, more technology awards like SIA Cody Award for Best CRM, which is interesting in the financial services industry. So I think, that this train is going fast. It's finally picked up enough speed to, we're not a bullet train yet, but we're hoping to really just, run as fast as we can and in a controlled way, but just really reach some levels that we've just never reached before.
Yeah, looking forward to following your journey. So Tom, really appreciate your time today, sharing your experience. If listeners would like to learn more about Identified, where should we send them online?
So yeah, www.aidentified.com is our site. And we've actually just relaunched that as well. So it'll be a much crisper message than it was from years ago.
Well, that sounds great. Yeah, appreciate your time today, Tom. And listeners, if you'd like to learn more about Tom's journey, check out aidentified.com to learn more. And Tom, looking forward to watching your journey. So appreciate your time today.
For me as well. Thank you, Ben.